right, my people, welcome to the stream. We are recovering after a bloody Monday. And I'm saying that with a smile, but yesterday was not super fun. And in hindsight, yesterday was not a good day for trading. Like BTC, Bitcoin and gold pumping yesterday was basically due to the fact that dollar were dumping and that we had a lot of fundamentals yesterday kicking in. And the strongest thing is that the US government decided to bail out the banks that basically are going bankrupt. And on if they're going to bail out the banks, that's billions of dollars that has to go into the system. Where are they going to get that money from? They get the money from printing money. And if they print money, what happens with the money supply? It increases, right? So what happens with inflation? It increases. So, and that is of course good for Bitcoin, and that is bad for and good for gold. So that is what happened yesterday. And besides Bitcoin and gold, everything was very bloody yesterday. And we have setups today. And to be honest with you guys, after yesterday's rally in the market, after yesterday's fight in the market, battle in the market, we are licking our wounds and basically just recovering. And the important thing that I want to just state here is, guys, always use proper risk management. It's so important. And you get like losses in trading, they come. And nobody's 100%, nobody's even 90%. I see some people like claiming out like they're 90% accurate in trading, and that doesn't exist. I've seen the best traders, some of the best are at about 85% accuracy. It all depends on how you count. But the most important thing is that they have proper risk management. So you can take 5 losses in a row and like it won't even bug you because your risk management is so tight. So you're losing maximum. What is proper risk management? You're losing maximum 1 to 3% per trade. Let's say it's 1%, just to count easy. If you're losing 1% per trade, that basically means that you can lose 100 trades before you have blown your account. All right. Now this is where win to loss ratio comes in. So always when we're trading, what do we have? We want to have at least a 3-to-1 win to loss ratio. It means that we can lose 3 times within one win. So if we win 1 time and we lose 3 times, that one win will recoup all those losses. So that's that. And this is why it's always important to trade with a proper strategy and proper risk management, and stick to it and then tweak it along the way. But you stick to the same strategy, you stick to the same trading plan, so you know what is wrong when something is wrong. You know what to adjust when something is to be adjusted. Now let's jump into to Bitcoin. So yesterday we had this whole pump, crazy. I love it, but I don't love it because I wasn't in it. I don't think I don't know if any of y'all guys were in it. Type it in the chat box. But I wasn't in it, so I just saw a lot of money pumping in, and you know that's when the FOMO kicks in. But we are disciplined, so we don't let FOMO control us, right? Good morning, Daniel. Hope you got your coffees ready. I got something nice on Bitcoin. Let's look at this. So BTC, look. This is what happened. Yesterday we pumped. Where is the highlighter here? Yesterday we had this pump. Boom. Came all the way in to the supply zone. Now the supply zone, I want to show you guys this on a bigger time scale. The supply zone is also inside of this Let's do like this. Inside of this yellow zone that you see here, this yellow zone is the sweet spot. It's the sweet spot from this swing. I can show you guys. If I pull the Fibonacci from here all the way to this bottom, basically calling this whole thing here a sequence. If we count this as a sequence, then we got a sweet spot here, and we got a major supply zone there. All right, let's remove that. Let's zoom in again. 4 hourly time frame. Now from this swing, from this top to this bottom, we call that a sequence. We have the supply zone here, and here's the supply zone, and in the same time that supply zone correlates perfectly with what? With this orange line. What is this orange line? This orange line is this trend line that you guys see here, that the market has respected very well and confluently perfectly matches up with the top of the supply zone. So basically the 88.6 Fibonacci retracement. What will happen from here? So when we got confluence with such a strong resistance, that most often turns the market. Now, why ain't I calling out a sell here? Like normally I would say, hey guys, we got a sell situation. We're going to short Bitcoin. But why I do with it? Because of this. When you have momentum up like this, you need to see this momentum cool off. It has a little bit, but not like it's. How can I say? It's like it hasn't run out of steam yet. So this momentum might continue, or we might get a little hiccup and then boom, continue. So this is why I ain't calling out a sell yet. I want to see basically this structure forming here just ease out even more, being squeezed out even more. Price is being squeezed here in a triangle, and I want to see it being squeezed even more. So basically like the whole market almost stops, and that's when you can see like market stops, and that's when you see the turnaround in the market. But in the same time, what we got to watch out for, let's say market turns around, goes down from here, but then we know there's a lot of manipulation in the market, especially now. So what easily happens is you get market movers pushing up the markets like this, stop punting us, and then press the market down. So it goes as we want to, but it manage to trigger all our stop losses before it goes in our direction. Rayo, good morning from Estonia. Would it be possible to see your Fibonacci settings? Or can you send the picture to the chat? Yes, of course, Rio, I can do that. And Estonia, welcome. Yo, guys, we got 8 people on the stream. We are streaming. Sorry, guys, tired today. We are watching from. We are tuning in from. I know we got Estonians in the house. I know we got Sweden in the house. We got something more. I'm personally streaming from Spain, Marbella. So I think most of us be here in Europe, because overseas they're still sleeping. They're about 6 hours, 5 hours behind us. This is my Fibonacci settings. Ottawa, Canada. All right, cool. What time you got in Ottawa right now? This is my Fibonacci settings. These, like if we do like this is the normal settings, the regular Fibonacci that I use. I mark these ones as yellow because of the sweet spot. That's the sweet spot area. So 50% to 61.8%. You can mark them as yellow or color you want, but just so you remember them being representing the sweet spot. And the 78.6 and the 88.6 represents the supply and demand zone. So you mark them as a separate color as well. Now these ones here, so there's minus 0.272 and minus 61.8 is negative Fibonacci extensions, and then you have the 1.272 and 1.618, which is the positive Fibonacci extensions. Print screen these, or we might do it like this actually. I can print screen it and send it out in the chat. Let's do like this. Let's do like this. And let's put it in the Telegram. 4 a.m.-ish. What you doing up so early? Alright, let's see this. I'm just going to post this print screen in the chat, and then we're back to it. There you go. Alright, back to it. I never slept. Prepping for Ramadan. Alright, when does Ramadan start? That's soon, right? April. What? I remember last year it was April, yeah. Because I remember it started almost simultaneously as Easter. As Easter for Christians. So, all right, back to this. As I said, strong point, very strong reversal point. Guys, look, this is what I'm saying to you. This is what I'm saying. So, I'm not calling out a sell here. Only thing I'm saying is, it's a high possibility for the market to turn around from here and start moving downwards. And if it moves down, what will happen is this is the first line of defense you gotta be aware of. So we might see chop around here or just bounce off this zone and come back up again. But if it moves down, you want to have your first take profit around here, and then next line of defense will of course be around the 61.8 Fibonacci retracement, March 22nd. Okay, cool. All right. So that's my idea creating this around this my analysis, but I personally ain't jumping into a sell right now. I might be jumping into a sell from here, from this point. Why is that? Why do I want to wait? Why do I want to wait for the market to come down a little bit? I'm losing all of this here. I could have made some pips there as well, right? Just to be sure, to get confirmation. Like for example, if I'm sending out a sell in the Telegram channel, I won't call it from here. I will call it from here. I want to see the market break this point of support, come back, retest it, and show that it doesn't want to break above again. And then we know that, okay, market wants to push down now. The bullish momentum is over. Let's look for sells. So this is what we're looking for there. And that sell can go far. Guys, there's a lot of stuff going on in the market. I will try to cover it. I will try to do a video and post it on YouTube where I will cover some of the stuff. I'm researching it right now, but there's a lot of stuff going on. Like, first off, we got banks. Like, we saw what happened with the Silicon Valley Bank. That's just the first one. Like, it's looking now like not only in the US, we're talking about Europe as well. Deutsche Bank, Swiss Credit. These institutions, and these are big institutions. They are shaky right now, and they might fail. They might go under. So there's a lot of FUD in the market, and if one of them fails, if one of these big institutions goes down, like the chain effect, the ripple effect in the market is massive. So there's a lot of things going on, but in the same time, we see this happen in crypto and Bitcoin, and this is super positive for us that knows and understands and loves crypto. Why? Because why do I love crypto? Not because it's so fun to trade and I can make money out of it. I love crypto because what it represents and what it stands for. It's the people's money. Not all crypto, but most of it, especially Bitcoin. So, and it dilutes the power from the banks. Banks are corrupt. If you guys didn't know it until now, I'm telling you, banks are super corrupt. The whole bank system is super corrupt. I'm gonna do a video on it. Watch it. I'm gonna cover all of it. Let's see if YouTube lets me have it up. But it's a very corrupt system. Bank Swiss going down, predicted by Robert. Yeah, you see. And if they go down, Bank Swiss is super big. If they go down, oh, the ripple effects are gonna be massive. So banks are corrupt, and they are corrupt because of their power, because of their greed. So they control basically everything. Like they control basically the world. They run the world. And if there's a challenger to their power, then that will interest me. And Bitcoin is definitely a challenger to their power. We so seeing this, for me, it tells kind of that, of course the pump came because USDC pegged again, got its peg back again with the US dollar. So like everything is stable and good again on that case. But seeing this pump, despite what happens to the banks and everything, shows me that people losing trust in banks and want to find an alternative. People are starting to see the bullshit that is coming out, and people start to understand the bullshit. And that is that. So for me, crypto is the solution. The problem is that we got CBDC, like governments are trying to make their own cryptos to compete against Bitcoin and all of this. And if you buy into everything to what the mass media says, then maybe that is a good alternative. If you don't, you're gonna see the truth, and you're gonna see that is just a means of for the governments to control you even more. This is why otherwise they could already use Bitcoin or some other crypto. We got XRP, perfect solution, but they don't want to do that. They want to have their own crypto that they control, because it's not decentralized, it's centralized. All right. Um, yeah, exactly. Considering the banks are going down, recession, etc., could the charts retest at the first mark and then just keep climbing then? Definitely. So I don't know which mark you mean with the first mark. Is it one of these two? But I can look. Today we got the CPI readings coming out. So we got major news. I'm gonna get back to that, but let's get back to this bank situation. So let's say, for example, Bank Swiss. It comes out today that they're going down and they halting all withdrawals. We might see this turnaround, Bitcoin starting to go down, and then the news about Bank Swiss pops, and what happens? Boom, Bitcoin moves up. People are pulling out the money from Bank Swiss, and they're looking for alternatives. Alternative is gold, is crypto, yeah, silver, or the commodities. Oh, yeah, exactly this one. Yeah, so it's very spot on, Noor. I definitely think that this can be a zone for where the price can bounce, and this is why I don't want to enter the market before we break that zone and come back and retest it as resistance. So we prove it to be resistance, because sometimes what happens, market can break through and then come back up again, just like this. We don't want to see that. So we want to see market breakthrough, come back up, retest it. And Daniel, you're saying a very interesting thing there. Could it be a cover up for sneaking in CBDCs? Put some tinfoil hat. Yeah, exactly. So this is what I'm investigating now, and this is the video that you will see come out soon. Or I think there will be a series of videos, but there's a theory that the banks are being, how you say, collapsed, run down on purpose. Because figure this, the governments, they are pushing, like, look, the mass media is pushing fear right now. So you see Fox News, CNBC, BBC, all of these major news, these major media platforms pushing fear. Bank run, Silicon Valley Bank collapse, this, that, and people are getting scared against the banks. Now the thing is this: you guys gotta understand one thing. The people that control the banks are the same people that control the mass media. This is facts. This is not conspiracy theories or anything I'm saying. This is the people that control the banks control the mass media. Do you think that they will sabotage their own business if they didn't need to? So there's a lot to it, and this is when we start to go into conspiracy theories. But there are people out there, and I'm not talking about average Joes like us. I'm talking about people that are higher up, very connected, has been working in the bank sector and everything, and they actually believe that the banks are being ran down on purpose by those that control the system, and this is to force people into the CBDC to force. So what happens? Banks goes down, inflation spikes up, people's money lose value. Suddenly people can't buy shit, and people are forced to go over to CBDC. Government presents CBDC. Look, we can offer you this instead. You will get much better value than your dollar that is losing value right now due to inflation, and people will be forced to convert to CBDC. CEO pulled out cash same day as collapse for Silicon Valley Bank. Guys, this technical analysis became a podcast, but sometimes it's nice or it's important to discuss the fundamental factors and matters that happens in the world, you know. So we're looking at these charts, but we need to understand what's going on behind the scenes also, right? Yo, Daniel, that CEO, was it the CEO of SVB? Yeah, exactly. So he pulled out his cash same day as collapse, exactly, and that should be illegal. That means, you know, you see the collapse coming and you're securing your profits, but all your customers are going down. Same thing that happened in 2008 with Lehman Brothers and all of them. They're not even hiding anymore. People are just blind. Exactly. Thank you, Norm. And this is the crazy thing. So this is why I'm starting to push out a lot of stuff on YouTube and on TikTok as well. The only problem is, like, my TikTok, for example, got shadow banned because I was pushing out this type of information. As soon as you push out the truth, they shadow ban you, or they shut your account down completely, like they did with Andrew Tate. But Andrew Tate is just one example. There's so many people out there that's been blocked because of this. But the only thing you can do is just open a new account and keep being a soldier for the truth. That's how I see it. Yeah, you know, like, if mass media can't give us the truth, at least let us share the truth among us and, like, awaken each other. You know, you're not even hiding. Yeah. All right, let's get back to the chart. Interesting topic. I wish we all could sit in a room here and discuss it, but that's that. Let's see what have I written here. So I make this kind of notes sometimes to remember. Let's see if price comes back to retest the trend structure. Could be a very good buy entry. Okay, cool. Let's see that. So what am I looking at here? Oh, and it's doing exactly what I wrote. So what I'm looking for here for buy for gold is, you see this structure forming here, and it's squeezing like a triangle. This is a bullish pattern. So this is if If we call this a triangle, then it's a bullish pattern, bullish triangle. And when I wrote that, market was here, testing this resistance. This here is a line of resistance that we have that we need to break. And first I was thinking like the most logical, yeah, let's see if market breaks this line of resistance, then we gotta sell up here to this red line. This red line represents the big supply zone that we have up here. This zone here. But then I saw something else. Then I saw, oops, I'm sorry guys. Then I saw this structure forming here, and I see how the market got squeezed and how it correlates perfectly with the 20-day EMA. So what I think is, oh, my fingers are not on point today. So what I think, or what I want to see now is this market come down here, test the structure again, and bounce off it. If it does, that's definitely a bullish sign. But still though, I was first thinking, okay, entry here. We can do that. We can enter the market here, but it's dangerous. I will tell you why it's dangerous. Because market can fake out. Whenever we have these kind of structures, so we have a bullish triangle here, all right? Market wants to pop out like this. What very often happens is stop hunt and then boom, up. Because those running the markets knows that people will want to enter around here, that people see the structure, because it's a very common structure and a lot of people see that. So it's a very easy liquidity grab for the banks, for the institutions running the market. So we have an interesting buy situation. I definitely think that this is going to happen, that we're going to come up here, but how we are going to come up to this supply zone, that's the question. That's what we're looking for now. So I want to watch this market a little bit more. Today we're going to be more cautious than yesterday. Today, now it's time to like, I counted us losing 90 pips yesterday. We lost 90 pips totally yesterday. That's 3 strikes in a row. That hasn't happened in months. Like at least 2 months that we have caught 3 losses in a row. So that tells also that says a lot about the conditions yesterday when we traded, but it humbled at least me a lot and it took me back to basics. Let's let the market come to us. Let's let us see that the market does what we want it to do before we jump into it. Yesterday we were too eager to get into the market. So I'm gonna watch this. I'm gonna monitor it. I'm sharing my ideas. I can even share this setup in let's make it a little bit nicer in the Telegram, just so you know what we're looking for. And guys, listen, when I share these kind of setups, you have the Prosperous Talks, the group where we can actually talk. If you got comments or inputs on the setups, please share it. Please share it. Like that's what we have, a community, so we can actually dissect each other's analysis and come to the best conclusion that is for the market. I'm only sharing the ideas that I'm doing myself. I'm a professional trader, and I share the ideas that make me profitable in the markets. But it doesn't mean that they're always on point, always spot on, always 100%. Like there's always room for improvement. And I'm always a student. I love to hear what people have to say to people, especially people with experience. So that's that. So this one, I'm going to share it now in the Telegram group quick. To write some big letters for those that are not in the stream. No trade yet. put it like this. What was the other one? Bitcoin. Let's post Bitcoin as well, if you guys have it. If we are new and just started, you know, charting, this is also why I post this, because I know we got a lot of new people. So this is perfect for y'all to look into and, you know, make your own analysis out of it. Practice on. Oh yeah, I forgot this. This is the possible scenario that we're looking for. Like that. Yeah, Nor, I see it. I'm noticing gold is close to being overbought on RSI line. Is this relevant? Yeah, it is relevant, but not as relevant as people want it to be. What do I mean with that? Same thing. Same thing. Remember what I said about the pattern here, the triangle pattern. That those that run the markets, they see this as well, and they know that people are going to react out of it, off it, and that's why they stop pump people. Same thing with the RSI. RSI is one of the most used indicators, and I got it here actually. Let's look at it. So RSI is one of the most used indicators, and of course, if something is overbought, it's overbought. But it doesn't mean that it's directly it's going to come down. Like let's say Bitcoin, for example, when it's in a bull rally, and like those last months when price is basically going vertical, it's overbought on overbought on overbought. Like it's so overbought, it's crazy. And it just goes to show that it's always room to push it even higher if you want to. If you got a capacity to. So those running the markets know that people are looking like, oh shit, gold is overbought, it's due time for sell. A lot of people are putting in sell orders. What do those that run the markets do? Boom, they stop hunt your sell orders to push the market higher. That is very often what happens. So use RSI as an indicator that market is overbought and it might soon turn. All right, but just because it is overbought doesn't mean that it's going to turn right now. That's what I want to see. What I want to say. Yeah, it's overbought on the hourly time frame. It's actually not overbought. On the bigger time scale. And remember, when it comes to indicators, the bigger the time frame, the more accurate it is. So it goes for any kind of structure that you're looking at on a technical analysis. So on the 4 hourly time frame, it's very overbought. Actually, I haven't even seen this. Thank you for notifying or alerting me on that, Nor. Interesting. All right, so now at this moment, what is happening? We have the structure. What is happening here? Market is testing the structure right now. As we speak, it's testing the structure and trying to bounce off it. This was the possible entry that I said, but I will not enter the market here because it's a high probability that it breaks the structure. It's testing it now, breaks it, comes down here, tests this structure as well, maybe does something like this, and then boom, catapults up. So we wait to see. I think this structure is gonna break because you see, like already, it was trying to push up. No, like it's already moving downwards. So it didn't even give it a proper try. So I think this market is coming down to these levels. So we just wait and see how this plays out. Right now, no entry, no buy for me at least. Let's go to Euro USD while we're waiting to see how that plays out. because I saw something. Yeah, exactly. I saw something interesting here. Look, this is beautiful. So we have this strong support and resistance here. This here. And as you guys see, it has been tested and respected multiple times. Even when it broke through a couple of times, call it stop hunt, wherever, it didn't go far before it came back through it. Now here it broke through, came back down, and it retested it perfectly. I mean, like perfectly, spot on. What does that say to us? So we have fundamentals showing that dollar is going down according to the fundamentals. Dollar should be dropping even more if these bank collapses continue. We will see the news today, 1:30. We got the CPI readings. If that pushes the dollar even further down, all this what you see here is a perfect setup for a buy, and not only for a buy, for a very strong buy, for a very strong push upwards, up until these levels. So until the supply zone here, and I would argue that this is the roof at 1.27, 1.127 is the price where I see the target, the roof. So this is a very good buy. The only question is, where is the entry for this buy? And this is what we're looking for now. So we have maybe a very good possible entry right now, and that is this retest. But I won't touch dollar, the US dollar. I won't touch it until the news. I don't think so, at least. Not if it's a very clear setup. So I want to see the news pop first, and let's go into that. Let's talk about the news because this is important, guys. We got red folders today for the U.S. markets and for GBP. We're focusing on the U.S. market because we're looking at Bitcoin, we're looking at gold, we're looking at Euro USD, and they are mostly affected by the U.S. dollar. So today we got the CPI readings, and the important thing for you to remember and understand is, in the CPI readings, the forecast is 0.4%. What is the CPI readings? It's the consumer price index. Consumer price index, and it basically shows if inflation has gone up or down, if how inflation is doing. So the forecast is 0.4%. If news comes out and is 0.5% or more, that is actually good for the currency. That is good for US dollars. So let's see, actually greater than forecast is good for currency. Yeah, exactly. So I just want to make sure that I'm not saying the wrong thing here. Yeah, so if it comes out better than forecast, it's good for the currency. And what does that mean? If it's good for the US dollar, gold goes down, Bitcoin might go down, should normally go down, but it has kind of deep peg now. And you will see Dow Jones and a lot of other commodities go down as well. If it comes out lower than forecast, so let's say it comes out 0.3%, opposite, we will see gold pump, we will see Bitcoin pump, we will see Dow Jones and a lot of currency pairs and commodities, equities pump. So very important. 1:30 today, and 1:30 I'm saying that's European time, that's Swedish time, so, or Spanish time. So you have to recalculate that, and we got 9:40 right now for people that are overseas, so you guys know what time we're talking about. So keep an eye on this, and I would recommend not to be in the market while the news drops. You can enter the market after the news drops and you see the pump. You see the volume in a certain direction. But you don't want to be in the market while the news pumps. Let's talk about that. Let's do a little training on that. What happens? Look. So, news breaks. This is a typical scenario when news breaks. Let's go on an hourly time frame. Oh. news breaks, and you will see, let's say the news breaks here. You are inside the market, and forecast comes better than expected. So the US dollar starts to pump, gold is supposed to push down. Before that happens, just before the news comes, people are starting to speculate wildly because people are basically gambling now in the market. And you will see the market do this. Put up, down, and finally get its direction. What does this mean? You are inside the market, you have your stop loss. Your stop loss will be, boom, smashed. You're entering again, smashed, smashed. Trust me, I've done this several times. I've seen other people do this several times. It's the same thing every time. If you're not heavy in profit already and got your stop loss like up here somewhere, then you don't want to be in the market when the news pops. So let's say we want to enter the market here, and we know the news are here. We're not going to enter the market. We're going to wait until the news pop, until we see this high volatility, and then we see the news printed. Yeah, of course, buy the rumors, sell the news. But if you want to do that, you gotta know exactly what you're doing. So we want to see this high volatility go first, and market find its direction and start pumping in that direction. Like here, for example, that's when we're hopping in. And you either scalp, you pick up small profits along the way, because you don't know how much it's gonna pump. Like it can come down here and then reverse. You don't know if it's gonna come down here or if it's gonna even continue even further. So you want to pick up small profits all the time along the way, as long as you see volume in the market. As long as you see volume in the market, you see the market is pushing in that direction that you want to, you keep doing those small scalps. Or you're entering bigger trades, but you just take profit along the way, and don't be greedy. Don't be thinking like, yeah, but what if if I wouldn't have done that, I could have caught like this whole move. I could have caught everything here. That's greediness talking. And if you're greedy in the markets, you will lose. I guarantee that. I can bet money on that. So you don't want to be greedy. You want to accumulate those small profits. You want to build up. You want to stack up like that. And sometimes you're lucky. You catch those big moves, but a lot of times you won't be lucky, and you will be stopped out, and you will regret it. And you will think about, oh shit, if I just would have sold here before the market turned around, then I would have caught that whole profit. You know what I mean? If you've been in trading for a while, you know exactly what I mean. So let the news hit, and then you hit the market. And if I'm calling out a trade, that will also be after the news. I can call setups before the news, like this is what I'm looking for to happen. This is what I do before the news. I make setups like the ones that I posted now in the Telegram channel. We look at them, we see, okay, these are the levels we're looking for. These are the possible scenarios that we're looking for. Now let's see what actually happens. And news hits, market starts to move. We see the direction clearly. Boom, we get in. Let's get back to, I'll take that bet. Yeah, all right, bro. Yeah, so gold is pushing down. Let's look at this. Yeah, you see? So it broke the structure. Now is a very nice entry point. Why is that? Because this whole region is a very nice entry point. Why is that a very nice entry point? We got the 61 point Fibonacci retracement of the smaller swing. We got the 61 point Fibonacci retracement from the bigger swing, almost perfectly aligning. In the same time, what do we got? Look at the number here. What does the number say? 1,900. It's a whole number. It's a whole round number, and markets love whole numbers, so it's also very strong support in the same time. So this is a very good entry zone for a buy. Why am I hesitant? Guys, look. This buy is good from here until here. But not further, because here is so much resistance, it can turn around and come back down again and test this again. So we only have a good buy from here to up to here. Then this is a no man's, like no trade zone, and then we got another good buy from here to here. All right. Hope you understand my beautiful Picasso drawings. But yeah, you see, so basically tested it, came back up. No buy yet. We don't need to rush into the markets. Let's just watch if we see something nicer. But the thing is like this. From here to here, we got, oh damn, we got 100 pips. That's a good trade actually. I'm gonna be honest, I thought it was less than that. I thought it was like 50 pips or something. I wasn't looking at the price, but we got about 100 pips there. That's a good trade. Yeah, we got another confluence. On the hourly time frame, we got the 20-day EMA also giving support there. Doesn't mean very much, but it means something. It reinforces the support at this area. I'm gonna be honest, I think we might have missed a very good buy opportunity here down here, but market might come down and test it again. If the market comes down and tries this area again, this is the buy opportunity I'm looking at. Like this. But and I would enter at around 1900.70. Why is that? Because I want to see that market bounce off nicely. The only thing is the take profits. So in this case, the first take profit, yeah, 1903 is perfect. That's 30 pips in profit. But I would put it even earlier. I would put it here, just to take some risk off the table. Bam. If market comes back down, this is the entry for our trade. But if it doesn't come down, guys, no worries. There's more trades. Let's not be greedy and hunt those trades. What I don't like with this is that the stop loss, like I would want to have the stop loss down here, but that's like a 50 pip stop loss. Not very nice. Nice, but not very nice. Yeah. I would put it at 1897.7. That's a 30 pip stop loss. We're sticking to our rules. I'm typing out these numbers, but we might already have missed this trade actually because it's starting to move in another direction. We'll see. $19.05. We always want to have a take profit at the 38.2 Fibonacci retracement. Why is that? Because 38.2 Fibonacci retracement is a very strong reversal zone on the retrace. You don't want to have it exactly on the 38.2 Fibonacci retracement. You want to have it on like just before, because sometimes market turns just before the level. So, and that level would be in this case 5 and just underneath. So 19.0. I would just do like this. That's good. And then it's getting more interesting. 1908. And the next one, I will just leave it open. This is the area, of course, a target area. The supply zone here would be the area, but it doesn't have to be. Now the thing is like this, we have to see what happens, because we got, this was the entry, and you see the market is going back up. So it's testing the 23.6 Fibonacci retracement on the small swing now. So hopefully it comes back down, hits our entry, and then we can go for this buy. If it doesn't, let's say it runs from here, guys, it's a no trade. We'll find more trades. Like never hunt. Like I know, especially in the beginning when you start to trade, trading is like, it's exciting. So you just want to find trades after trades. When you finish one trade, you want to get into the next one. And this is a recipe for a disaster. Like you will blow your account as long as you're in that emotional status. All right, so you gotta be very emotionless. You gotta be very cold entering the markets, and you gotta be I say very selective with the trades, and just let the trades come to you. If you miss one trade, no problems. Let's look for the next one. There's always trades, and if you didn't catch a whole trade on a trade on the whole day, no worries. Tomorrow is another day. All right. So, like I always say, we rather don't trade than trade and lose money. All right. Now, this is the setup. I will send it out in the Telegram channel as well. Oh shit. Wait, I'll do just some clear instructions here so that nobody misunderstands this and does a wrong move. Remove this arrow here. This is what we're doing. Telegram, boom. Yep, that's the one. That's what it is. Alright guys, with that said, I'm gonna finish the stream for today. I don't know if I managed to finish that video I was talking about today, but when it comes out, I will let you guys know in the Telegram channel. If you're not in the Telegram channel yet, it's in the link. The link is in the description box below. And I'll see you guys. If nothing else, I'll see you guys tomorrow morning. Remember the news. Don't forget the news. High alert on that. And yeah, just be cautious with that. Don't try to be in a trade while the news is popping. All right. With that said, have a nice day. Stay blessed. Trade safe, and be prosperous. Thank you, Daniel-san.